Hey everyone, welcome to my channel. I'm Doris and I'm here to share with you about my stock account update. Today my account made a loss of 2022 US dollars. In today's market, US stocks closed higher on the Dow for a sixth straight day, while Tesla pushed the Nasdaq higher. Today my account has made a loss including the post-market price of $2,004 or 2.63%. So now my net asset of my account is $74,109.89. Today the SQQQ decreased by more than 2.5% to $38.85, and DRV decreased by more than 2.6% to $40.97. Today Nasdaq Composite rose by 0.95%. S&P 500 increased by 0.25%, and Dow Jones Industrial Average rose by 0.08%. The auto manufacturers industry, the ETF increased by 6.91%, and the credit services industry rose by 2.15%. US stocks closed higher on Friday, with the Dow up for a sixth straight session. Tesla has led the tech stocks higher. All three major indexes posted gains for the week. The U.S. core PCE price index in December reinforced expectations that Federal Reserve would slow the pace of rate hikes further. The market continues to watch U.S. earnings. All three major U.S. indexes rose for the week. Dow Jones rose 1.81% for the week, while the S&P 500 gained 2.47%. The Nasdaq Composite rose by 4.32%, its fourth straight week of gains. Tesla closed at 11% higher on Friday, bringing its cumulative weekly gain to 33.3%. The company reported strong results this week. On Friday, the labor market reported that the core PCE price index came up to an annual rate of 4.4% in December, slowing to the slowest annual growth in more than a year. While consumer spending fell, analysts believe the December core PCE data confirmed expectations that Fed monetary makers will further slow the pace of interest rate hikes. The PCE price index hit an annual rate of 5% in December, still well above the Fed's 2% target, but both at the slowest pace since the end of 2021. The market continues to watch U.S. earnings. Intel announced that both revenue and earnings were below market expectations. American Express earnings and revenue missed expectations, but issued a strong guidance. Investors are chasing European stocks at the fastest pace in nearly a year, but the money flowing into U.S. stocks since 2023 is far less than last year, fearing the bank is in a recession. European equity funds had a $3.4 billion in inflows in the week ended January 25th, according to a new report by Bank of America strategist, leading by Michael Hartnett, citing EPFR Global Statistics. It was the biggest increase since February last year, and the second week of inflows after 48 straight weeks of outflows. Chief Investment Officer of the Alliance of Independent Advisors said, "The stock market rally this year is really impressive and should not be ignored. Unfortunately, the Fed may start beating the market again as early as next week, so prepare for another volatility this year. We may be in the temporary calm of the eye of the hurricane, not fully out of the trouble." Tesla closed 11% after saying it's beat both earnings and revenue expectations in the previous quarter. CEO Elon Musk expects to produce 2 million Tesla electric cars this year. The stock fell 65% last year, causing overall turmoil in the growth sector. The stock is already more than 44% year to date. On the economic front, the Commerce Department reported on Friday that the PCE price index rose 5% in December from a year earlier, the sixth straight month of slowing, but in line with expectations of 5.5% last month, up 0.1%, unchanged from the previous months, and slightly above market's expectations of zero growth. Excluding volatile food and energy prices, the Fed's preferred inflation index, the core PCE price index, rose 4.4% year-on-year, in line with expectations and below the Fed's 4.8% forecast for a core PCE at the end of 2022. Month-on-month increase of 0.3%, in line with expectations, up slightly from 0.2%. Year-on-year growth in core PCE in December 22 was the lowest in 14 months since October 21, 2021. Still, double the Fed's 2% inflation target. This is proof that U.S. price pressures continues to slow, but remain high and could prevent the Fed from suspending the pace of raising rates, but paved the way for the FOMC to further slow raising rates to 25 basis points next week, analysts said. Another data showed that U.S. personal income in December was 0.2% sequential, 0.2% expected, 0.4% lost. U.S. personal consumption spending PCE in December was 0.2% month-on-month versus 0.1% decrease expected, 0.1% lost. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.